Ozzie, you sent me some notes, and the lead thing was that the CMHC is forecasting a price decline next year. I'm assuming for Vancouver real estate prices or for Metro Vancouver. Can you tell us about that? And what do you think about it?
Well, generally, of course, CMHC always hedges its bets, but the Western Investor quoted them as saying that they figure our average sale price in Vancouver will be between $940,000 and $980,000. Then they expect it to drop in 2019 to somewhere between $847,000 and $900,000, and then go down as low as $800,000 to $900,000 in 2020. So a wide range. But when I look at the details, that would look at about on average about 9% decline next year and 4% the year after. But if you take the real high of this year of 980 and go to what they expect it might be in 2020 at 800,000, that's a 19% decline. And Victor, it's not a surprise to me because the west side already is down 20% on its average price, whereas the rest of Vancouver is still hanging in there. But in addition to that, they're looking sales to crunch further down, 50,000 units they had in 2017. They expect 35,000 this year. Might recover next year to 40, but no way are we going to be back into the 40,000 range. So generally, they're concerned, and part of that is what you were talking about with Mike earlier, that it's the now strengthening, that the worry about a $230 billion overhang and the HELOC mortgages, increased interest rates, and all that. They're very concerned, and that's why the forecast is no surprise.
Okay, so you've got this quasi-government agency that is forecasting prices and sales to decline. You're saying in some respects they've already declined, both prices and sales. You know, something that Mike always asks me when I'm doing the trading desk segment with him is, Victor, tell us, what are you doing now? So I'll talk about what I'm doing in the currency markets or gold or oil or whatever. So, Ozzie, you're the real estate expert. Given that this is happening, sales declines, price declines, what are you doing yourself, or what are you telling the people that come to your seminars? Is this an opportunity, or are you saying wait, or what are you doing?
Well, certainly, first of all, I keep my cash flow properties. I always have, I always will. But I've sold all the ones that are just going for the profit. And the reason is that we're expecting to go into a down market. We're expecting higher interest rate. You know, in my newsletter called the Buzz, OZBUZZ.ca, it's a free newsletter. I've been arguing now for over a year that we're going to see much higher rates. I think the 5-year rate probably will be over 6% by the end of next year. We're forecasting a recession in 2020. So you want to be careful. But to the new buyer, the young couple, this is your market. I mean, why do we think we have to have multiple offers every minute before it's a good market? For a buyer, this is perfect. Agents have time. You have a lot of properties to choose from. Builders might give you free starter fees and extra parking or furniture or even a car. I mean, haggle hard, make offers, don't run, and absolutely do not buy something without having sold your property, or make the offer subject to you selling the property. You don't want to get stuck with two. But there's no reason to be scared. At least you're going to pay off the mortgage and you have an asset. But from an investor's point of view, Victor, I tell people the number one thing that you have to have is protect what you have. And I said that at every conference since 2017. And it's age-related. If you're over 70, get 50% into cash, because opportunities will develop, and that's already happening now. Over 60, get 40% into cash. But if you're under 40, get fully invested. Swing that bat. You know, if you lose it all, you have time to make it back.
That's interesting. So it's a different market for people in different age groups, as well as people with the different risk tolerances and that sort of thing. Okay, Ozzie, I know we want to get to the hot properties segment, but I know you had a thought or two about the HELOC market, and there was something bubbling here that with people that have a HELOC might have trouble getting a second mortgage. I'm not clear on that. Can you just spell it out for me?
Yeah, it's sort of very quietly been introduced last week by the TD Bank, who is the number one player in HELOCs, and you can rest assured it will be followed by everybody else. But if you're applying for a separate new mortgage and keep your existing HELOC, TD is requiring now that you prove you can afford a theoretical monthly payment based on the limit. So much like the stress test in general is looking for a theoretical payment that you have to be able to afford, now they're adding the HELOC. So that will really affect the secondary market in terms of the second home rental markets. Now, I should quickly say that if you're just renewing your mortgage, there's no impact. But the whole idea of, and you and Mike were talking about it, the government now blaming the buyer. Hey, nobody ever walked in the bank and says, hey, I need a HELOC. No, they said, you should, because you walked in the bank and you wanted a mortgage and said, no, you need a HELOC, right? And so this is so easy now. Canadians for a while were stuck between, I need to save money, and then, but you only live once, right? And the HELOC was there for me to borrow money from, easy, effortlessly. Well, now there's a new stress test going to come. Nobody talks about it, but I assure you it'll knock another number of buyers out of the market, another reason why we have a slowdown in sales.
All right. Thanks, Ozzie. A hot property, too, and I should mention, by the way, folks listening, it's Jurock, JUROCK.com is his website, and the hot properties are listed there. What have you got?
Well, we got a great property in Pemberton. It's a show suite in an 8-year-old building. It's 20 minutes from Whistler. It's on at $329,000. We have the least expensive condo in Victoria, one-bedroom suite at $179,000. And a new one, you can get a lot in Oliver for about $130,000. Put a house on it, and you have a brand new house and a new lot for around $386,500, give or take a few dollars. But those are three hot properties for the day.